G'day expats. Today we wanted to talk about probably one of the most debated topics when it comes to becoming an Aussie expat is, are you a resident or non-resident for tax purposes? The confusion surrounding this relates to a lot of misinformation on the web combined with the ever-moving goalposts that the ATO sets for those who are based overseas. There are a number of circumstances in which a Aussie expat may be considered either, and no one single factor is decisive in making this determination, and usually a lot are interrelated, which causes a lot of confusion. One of the first tests is called the resides test, and usually this is what most expats hang their hats on. However, the resides test is not conclusive in determining whether you're a resident or non-resident based on the amount of time you spend in Australia. The ATO, however, has indicated that 6 months is usually a good rule of thumb, and that does not have to be continuous, as to whether you reside in Australia or outside of Australia. The key indicators are whether your behaviour matches that of an Australian resident or a non-Australian resident. An Australian may be considered a resident if their day-to-day behaviours matches that of an Australian resident, as opposed to the day-to-day behaviours of a non-resident. Factors that the ATO take into account as to whether you are a resident include your intentions or behaviours, family or business ties, maintenance or location of assets, and social or living arrangement. If the resides test cannot be met, then one of the following tests may be considered to determine your tax residency. The first test is the domicile test. A person will be classified as a tax resident if their domicile is in Australia, which is pretty fair enough. A domicile is considered by law to be a person's permanent residence or home. This test of residency is normally applicable for expats when they do move overseas for a permanent period of time due to work. The ATO will take into account the following considerations when considering whether they have a permanent place of residence overseas: intended or actual length of time overseas, existence of a home base overseas, existence of a family home in Australia while overseas, and family and financial ties in Australia and overseas. The weight of each factor will vary according to personal circumstances, and no single factor will be decisive. The next test is the 183-day test. Under this test, an individual will be classified as an Australian resident if they spend more than 183 days in Australia in that financial year, whether continuously or intermittently. The only time that the ATO will accept that this person is a non-resident is if they can be satisfied that their usual place of abode is overseas. And the last test is the superannuation test. This test relates to Commonwealth Government employees, and in order to qualify for this test, the following conditions must be met. They must be a member of a superannuation scheme set up under the Superannuation Act 1990 and be classified as an eligible employee under the Superannuation Act 1976. If this test is met, then they are considered to be a resident for tax purposes, and this includes their spouses, whether same sex or de facto. This also applies to their children, all below the age of 16. I hope you found this video useful in determining some of the processes involved in classifying as a non-resident for tax purposes. If you have any questions, please send us an email at info@atlaswealth.com.au, and we look forward to talking to you shortly. Take care and have a great day.